Thanks so much for tuning into the Trade Setup with me, Niraj Shah. Let's take stock of what could happen in trade today. Remember the US markets, and they'll come up on your screen, had a decent outing. The futures have been yo-yoing from being in the red to being in the green. As we recorded this, it's in the green at about 7:45 a.m. So the world is not a bad place. Asia, though, had a very mixed open, I must say. For now, Hang Seng, Nikkei, all of them trading in the green. So therefore, the cues don't seem to be as bad. In fact, let's also take stock of the global news flow before I come to the implied open. So the US 10-year Treasury yield rebounded after hitting one-year lows. Oil prices were slightly higher as investors monitor the Iran-Israel tensions, and the conversation of that emergency rate cut is gone out of the window because David Solomon, none other, has come out and said that the US the Fed will forego the emergency rate cut despite weak jobs data. So that's effectively the key news flow you need to monitor. Keep an eye out on the Middle Eastern tensions. The implied open for today should come up on your screen next. A smart start. We are hitting the point of resistance. Let's see if we see some resistance here, or do we see the markets continue to move higher? I mean, million-dollar question, really. So what's the trade setup for the day? Tuesday's trade might reinforce the sell-on-rise beliefs. Remember, Monday was a bad day. We started off well, and then we gave up the gains. So an average day trader on the street would believe that this, for now, is a sell-the-rise market. And today might be, well, that litmus test of whether traders come out and sell the markets at around that 24, 200, 300 zone, because technical traders are citing this zone as the key resistance zone. Very important to see if we go above this and stay above that convincingly, or do we retreat from these levels. To my mind, it's very difficult to see the Bank Nifty showing a very sharp uptick ahead of the MPC decision tomorrow. So remember, yesterday the Bank Nifty was the key culprit in trade, and I would suspect that that might well continue to be the case today as well, that the Bank Nifty will not have very meaningful moves ahead of the MPC rate decision, or MPC decision. I don't know if it will be a rate decision or not. From pockets to monitor, I think when you look at the Q1 releases thus far, healthcare and chemical stocks continue to be the ones that the street seems to be liking. So that's a pocket that you want to keep an eye out for. Now, Citi Research has come out with a view and saying that the positioning in carry is not clean as yet, but it's below danger levels. However, cleaner positioning is not a reason to re-enter equities. Now, you'll hear arguments on both sides of the table. We don't know who will be right or wrong. For now, it seems to be a no-go, but the morning seems to be in favor of the bulls. Remember, a lot of results today, a lot of mid-sized, very important companies coming out with results. So you got to keep a keen eye out at the broader end of the spectrum to look at the kind of numbers that are coming out. There is a Pidilite, which is very important. There is CCL Products, consistent performer. Apollo Tyres, with all that crude is doing, will be important commentary to watch out for. Signature has had a very strong Q4 and Q1. So let's see what happens here as well. The Q1 update was very strong, remember. Okay, clutch of result reactions to monitor today, but I'll start with the bad news first across the board, results and otherwise. Hindalco could be in for an eye of a storm, maybe, maybe not. CBI has booked the company for alleged corruption in getting environmental clearances for coal mining. This was an NDTV exclusive, and let's see if Hindalco has a bit of a corrective move at the start. Some of the result boys will have a corrective move. So VIP Industries, revenues were up 0.5% at 639 crores. The estimates were 688. So below estimates on revenue. Margins cracked 7.7 versus 12.7. The estimates were 11.6%. And bottom line, PAT down 94% at 4 crores versus 77 crores. The weak quarters for VIP continue. Remember, the stock is corrected quite a bit, but I would suspect that there could be more in store. So watch out for VIP in the session today. Watch out for Bata too. Revenues down 1%, extremely flatline revenues in the session today at 2.5% lower. EBITDA margins at 19.6 versus 24.9, weak EBITDA margins as well. Performance, the expectations were 26.2. PAT up 63% at 174 crores. Why? Because there was an exceptional item. There was a gain of 134 crores in Q1, as a result of which the PAT looked good. Citi as a sell, with a target price of 1,050, which is a 30% downside to the current market price. They say a revenue CAGR of 1.4% was the lowest in the last 9 quarters, and it continues to underperform other consumer discretionary and retail companies. Gujarat Gas didn't have a great quarter either, though revenues were okay, 4,450 crores versus 4,091, but EBITDA margins 12% versus expectations of 15.3. So big drop out there relative to estimates. And profit after tax down 19% at 331 crores. The expectations were 365 crores. Weak quarter for Gland Pharma as well. Revenues were up 16% at 1402, though below Bloomberg estimates of 1519 crores. But again, margin decline 18.9 versus expectations of 23.6, and profit after tax down 26% at 144 crores versus estimates of 214 crores. So weak quarter. Citi has a sell, target price of 1310, the current price of 2106 suggests about a 30% downside. They said the EBITDA miss was because the base business injectables sales decline, and they are feeling the pinch of US business competitive intensity. So watch out for Gland as well. Fortis, mixed bag. Revenues were okay, 1858 crores for Fortis. EBITDA margin was at 18.4 versus 16.4. but lower than estimates, as a result of which the bottom line number, while up 40%, optically looks very strong, but just about in line or below estimates. So a bit difficult to say what Fortis could do in the session today. I'll not hazard a guess. What is more predictable is Lupin. Very strong performance. Revenues up 16% at 5,600 crores, above estimates. Margins above estimates, PAT above estimates. Look at that margin performance, 23 versus 17.8. The expectation was also strong, but it beat expectations quite handsomely, as a result of which bottom line 805 crores versus 564 crores. Very strong performance from Lupin's side. PB Fintech had a one-off again. You know, revenues were down 7% at 1,010, but above estimates. However, there was an EBITDA loss of 40 crores. The expectation was 19. And there was a PAT, but that was because there was a one-off item of, I think, some 140 crores odd, as a result of which there was a net profit. Otherwise, there would have been a loss. So keep that in mind. Tata Power, not a bad set of numbers. Revenues up 13% at 17,294, above estimates. EBITDA margins above estimates, PAT above estimates. On all counts, it was above estimates. Watch out for this one. Cummins had a very interesting quarter too. Revenues were flattish, 4% at 2069 crores, lower than estimate, but EBITDA margin clocked in a very healthy performance, 28.2 versus estimates of 26.2. PAT up 17% at 449 crores versus estimates of 404 crores. So watch out for this one. A slew of other numbers which were mixed, except for Linde, which showed an uptick in, PI Industries, very good set of numbers. Watch out for that as well. EBITDA margin expanded, and PAT was up 17% at 449 crores. So that's the other one you want to watch out for. And a slew of other results. Linde India, operating margins expanded, otherwise weak on all counts. And the others, Chambal, Indigo, EIH, all of them had one or the other issues. In Chambal, revenues were down, even if operating margins were better. Indigo Paints, Q1 margins and PAT were below estimates. And EIH, Q1 results were below estimates because margins were down 420 basis points at 25.6%. So watch out for each of these. The only antidote to the fluctuations in global markets is that everybody expects rate cuts to come in sooner rather than later. This might well help spur risk appetite on the street. Watch out for these. Thanks so much for tuning into the Trade Setup. Have a great day ahead.